Warren Buffett, the most famous investor in history, just made a jaw-dropping nearly billion-dollar bet on two of America's most controversial home builders. These are companies known for building what critics call disposable houses. That's right. While the entire internet is screaming about a housing crash, Berkshire Hathaway is in the shadows, quietly accumulating over $800 million of Lennar stock and another chunk of DR Horton. The total investment is climbing past $1 billion as of August 2025. But here is the secret that should really blow your mind. This isn't about selling homes anymore. These companies are executing a brilliant, terrifying pivot. They are becoming America's biggest landlords through a strategy called build to rent. The numbers are absolutely staggering. This sector has exploded by 270% since 2019. Right now, these corporate giants control a kingdom of over 350,000 rental homes, and they are adding tens of thousands more as we speak. Look, I am about to show you the secret architecture of the modern housing market that almost every other analyst is missing. There is a hidden reason Buffett's hand-picked successors are piling into home builders right when mortgage rates are suffocating buyers at over 6.5%. There's a reason they're buying, while the average American now needs to earn a staggering $126,700 a year just to dream of affording a median-priced home. And no, it's not because they think home prices are about to crash, it's the exact opposite. But before we dive into the secret, let me ask you a question that might sound insane. What if I told you that Dr. Horton and Lennar don't actually care if you can afford to buy their homes anymore? What if their entire business model has shifted to something far more profitable, something guaranteed? And what if the housing shortage everyone is terrified of is actually their golden ticket to decades of locked-in profit? Stick with me, because today I am revealing the three game-changing shifts happening in real estate that explain exactly why Berkshire Hathaway is making this colossal bet. Once you see what's happening behind the curtain, you will understand why this isn't just a smart housing play. It's the blueprint for the future of American life. All right, let's get into the evidence. According to Berkshire's latest SEC filing from August 14th, 2025, they now own 7.05 million shares of Lennar and 1.48 million shares of DR Horton, a combined billion-dollar bombshell. Now, before you say Buffett has lost his mind, here's the kicker. It probably wasn't even him. These positions are just below the multi-billion-dollar threshold for Buffett's direct involvement. This trade has all the fingerprints of his chosen successors, Todd Combs and Ted Weschler. And here's why that matters even more. These guys don't make headlines, they are assassins in the market. They only move when they find something truly special, an inefficiency nobody else sees. Think about the world they're operating in. Mortgage rates are locked at 6.58%. First-time home buyers, the lifeblood of the old market, have collapsed to just 24% of sales, the lowest share since 1981. The median home price is a fortress at $435,300. So I ask you again, why on earth would these master investors buy home builder stocks now? Here's where the story takes its first dramatic turn. Remember when I said they don't care if you can buy their homes? Let me show you what I mean. Dr. Horton, the disposable house builder, has quietly constructed over 14,000 homes since 2019, built exclusively for renting. They are now operating in 33 states with an inventory of nearly 40,000 rental homes planned for 2025 alone. In just their last quarter, they sold 1,065 single-family homes for $313.5 million. But did you catch who they sold to? Not to families. They sold them to institutional investors, to Wall Street. They aren't selling homes anymore. They are selling entire neighborhoods in bulk to the financial elite. But wait, it gets even crazier. Lennar just announced a monster partnership with Invitation Homes, the corporate landlord that owns 80,000 houses across America. Through a joint venture backed by $1.25 billion, they are planning to deploy over $4 billion to buy up new homes and immediately turn them into rentals. This partnership already controls 4,400 homes in Florida, Texas, and the Carolinas. This is the midpoint revelation, the moment everything changes. These builders have discovered a shocking truth. They make more money renting homes than selling them. They get guaranteed cash-rich buyers for their entire developments. Wall Street firms write one check for a whole neighborhood. The risk of finding thousands of individual mortgage-qualified buyers? Gone, vanished. And the profitability will make your head spin. The average build-to-rent home now rents for $2,181 a month. That's a 10% to 40% premium over a comparable apartment. And get this, they are maintaining a stunning 97% occupancy rate. Nobody is leaving. Stop and think about what this means. This isn't a bug in the system. It has become the defining feature. The National Association of Realtors confirms that of America's 46 million renters, only 6 million can actually afford to buy a home today. That affordability crisis, it's not a crisis for them, it's a moat. It's a captive audience. Look at the absolute insanity in California. The median monthly payment for a home there is now over $5,900. You need to earn $237,000 a year, literally double the state's median income, just to get in the door. Since 2020, payments have exploded by 82%. Are you starting to see the brutal genius of Berkshire's play? And when homeownership becomes a mathematical impossibility for the majority of Americans, what is the only alternative? Renting. And who is perfectly positioned to provide those rentals? The very same builders who used to sell you the American dream. This isn't random. The build-up is strategic. Phoenix has over 10,000 of these rental units already, with 4,500 more under construction. Dallas-Fort Worth has another 10,000. Atlanta is adding over 3,000. These are America's fastest-growing cities, where millions are moving for jobs but are being permanently locked out of ownership. The demographics tell the whole brutal story. Millennials, who make up 64% of the demand for these rental homes, have a home ownership rate 8% lower than previous generations. A shocking 43% of them have saved less than $3,000 for a down payment. Gen Z, they barely even register as home buyers, but they are a massive force in the rental market. Now, let's address the elephant in the room, the quality. Dr. Horton has a pathetic 1.3-star rating on consumer sites. Over 1,000 Better Business Bureau complaints report construction defects, mold, and cheap materials. But here's the cold, hard truth that you must understand. When you're building homes that sell for $369,600, that's 28% below the national average. You are not competing on quality. You're competing on price. And for rentals, the entire calculation changes. The institutional investors buying these properties care about one thing and one thing only: cash flow. The math is simple and savage. If they can buy a house for $300,000 and rent it for $2,200 a month, while a regular family would need a $2,500 mortgage payment for that same house, they capture everyone in that gap. They are literally printing money from the death of affordability. The quality just has to be good enough to keep a tenant, not perfect enough to justify a 30-year mortgage. This is why housing inventory has been rising for 20 straight months, yet prices haven't crashed. The builders have a secret escape valve. If they can't sell to you, they sell in bulk to Blackstone. Think I'm exaggerating? Blackstone just paid $3.5 billion to swallow Tricon Residential and its 38,000 rental homes. Progress Residential controls 85,000. First Key Homes has 50,000. This is a systematic institutional takeover of the single-family home. If you're finding this breakdown valuable, please take 2 seconds to hit that like and subscribe button. Every single click helps us fight the algorithm, supports the channel, and keeps us fueled to bring you content that exposes what's really going on. Thank you. Now back to the final act. Here's the final piece of the puzzle that sealed the deal for Berkshire's team. The Federal Reserve is signaling rate cuts in late 2025 or early 2026. When that happens, the cost of borrowing for these giant institutions drops dramatically. But here's the kicker. Even when rates fall, forecasts from Fannie Mae and the MBA show that mortgage rates for average buyers aren't expected to dip below 6% until late 2026. That creates a golden window, a perfect storm where institutional landlords get cheaper money to buy up more rental inventory, while normal families remain locked out. This is a self-reinforcing cycle that benefits exactly two groups: the builders creating the rental supply and the Wall Street funds buying it. Look at the valuations. Dr. Horton and Lennar are trading at PE ratios in the low double digits. This isn't a frothy tech stock, it's deep value territory, exactly where Berkshire loves to hunt. Their balance sheets are fortresses. The smart money isn't betting on a housing crash, they're betting on a permanent transformation of how Americans live. So here is our prediction. You can quote us on this. Within 5 years, the majority of new single-family home construction in America's growth markets will be build to rent. The American dream of homeownership isn't dying. It has been institutionalized, financialized, and is now being rented back to you at a premium. So, what does this all mean for you? When Warren Buffett's hand-picked successors start betting $1 billion on home builders, it's a powerful signal that we have hit the bottom. Housing inventory is finally rising, but prices have flatlined, not crashed. Why? Because the builders and their institutional partners will simply convert unsold homes to rentals before they ever let prices collapse. So the real question is no longer when will the crash happen? The real question is, what do I do in this new reality? If Buffett's team believes we've found the floor, are you still waiting on the sidelines for a crash that may never come? Or is this your narrow window to buy before the next cycle begins, competing against both regular buyers and billion-dollar funds? Berkshire Hathaway isn't betting on a simple housing recovery. They are betting on a housing transformation. The question is no longer whether prices will crash or soar. The question is whether you will be a buyer, a renter, or an investor in this new paradigm. The choice is yours. But looking at the data, it seems Berkshire Hathaway has already made theirs. $1 billion says the future of American housing isn't ownership. It's subscription-based living delivered by the very same companies that used to sell you the American dream.